Good morning, traders from each and every part of the world that you're joining this series of the Daily Morning Market Call from. My name is the fabulous Kefa Eric, one of the market analysts here at HFM. HFM linking you to the global markets to access various financial assets. Now, the drama continues. And which drama is this? The trades wars and tension between the United States and her trading business partners, with reference and concentration to Canada, continues. Good morning, and good morning everyone else coming in. So, like I was saying, the trade drama continues. The trade wars and tension between Canada and her business partners continues, with our concentration on Mexico, on Canada and Mexico. Mexico has decided to engage the United States in an effort to review the tariffs imposed by Donald Trump. Now, for those who are getting to hear this for the first time, tariffs are taxes imposed on imports. Now, the United States imposed taxes on imports from Canada and Mexico, and that is normal, imposing taxes. But now these are high taxes, 25% taxes, more taxes on imports from these two countries. Now, this is not the normal way of conducting business, or what we would refer to as the modus operandi of conducting international trade, because countries should be friends to each other and be considerate to each other. But now we see the United States initiating a program on Trump's tariffs to add more taxes to the imports from these two countries. Mexico has decided to engage, but Canada is definitely fighting back. We are going to be looking into that in today's video, and the effects of that it is keep to have on various financial assets. We are going also to look at already printed high economic data and what we project into the future in context of the financial markets, before we go to the charts and see the re-evaluation of this. But before we proceed, I would like to bring it to your attention that this is going to be a pre-recorded YouTube video, to mean that you could access this YouTube video among many other YouTube videos on our YouTube channel at HFM Kenya. When you go to YouTube and search HFM Kenya, kindly like, subscribe, and click on the notification button so that you are not left out in future videos that we process from time to time. Wanted to show you how that would look like. Awesome. So come search HFM Kenya, it will bring you here. Subscribe, go to the videos, see the various analysis, go to the how to videos, see how to navigate, and don't forget to also like and subscribe, so that in future when we produce this content, it is going to be super beneficial to you as we proceed to the chart. Now, amidst the trade war that are happening in between Canada and the United States, it is important to note that the United States began this particular trade war by imposing tariffs on Mexico and Canada. Mexico decided to negotiate. Canada is retaliating. Canada retaliated by also imposing taxes on United States, and an equal tax, 25%. So we see Canada attempting to slap back at United States by imposing the same percentage of tariff that the United States imposed on them. However, the United States did not back out from this war. Yesterday, the new administration of Donald Trump had a busy day at the White House, and we see them attempting to increase an additional 25% tariff on Canadian steel and aluminum. Now we see United States proceeding with the trade war, but targeting now the much critical imports from Canada to the United States, which is steel and aluminum, so precious earth metal, if you may like. Now, this would have the the imports from Canada having a total up to 50% tariffs, now that becomes a little bit cautious. Now, this is going to have the market cautious despite ongoing economic data being printed out. And talking about economic data, yesterday we had the JOLTS job opening printing, and the JOLTS job opening, which was printed, simply is employment data. Is employment data which shows us the number of expected jobs to be created. This brings a little much of optimism in the economy, because more jobs would mean more people getting employed, government getting taxes, economy blossoming or glowing, becoming much more stronger. Now, but in having this in mind, that this had a somewhat boost on the power of the United States dollar, but the tensions which are happening in the trade side of the economic uh, circles and context of the global markets seems to have a more effect on the charts. Having this in mind, let's see how this is affecting. On gold, yesterday we see we closed with a bullish marabuzu, which means a candle which is showing much momentum to print on the upside. We had said from way below here that this is going to be a risk of approach, or a less risky approach to continue being long on gold. First of all, because the overall trend is uptrend or bullish trend. Second is because the current geopolitical forces are to be interpreted as such. Now, if you were long yesterday on gold, I'm pretty sure you had quite an interesting day and some possible profit you carried home. This is possibly going to continue until we hit the 3,000 mark. Or do you think? Comment on this chat box and say what you think. But this is going likely to be the case, because we are not only experiencing the tension caused by the trade tariffs, we're also seeing a little bit of escalating tension between Russia and Ukraine, in fact the entire Europe, where we see now the new administration of Donald Trump being engaged directly with this military warfare. This is now not trade warfare, by threatening to impose more sanction on Russia, by affecting the prices of oil in the global markets, so as to make Russia have less resources to proceed with the war. Okay, this is quite likely to happen, and we will see possibly a price printing to the 3,000 mark. That would have us being considerate to get in for long, to look for long position in that context. Moving on to indices, and the Americas indices in this particular manner. This is US 500 or S&P 500. We are still on the bearish momentum that was created, and this is will continue happening as long as the wars proceed to escalate. So S&P 500 would be considered to have been bearish as long as the tension are happening, and this is likely to continue in the week as we proceed. I see Ridge is saying, in the uncertain, many investors invest in safe haven assets, thus investing in gold, which makes price move up. Yes, Ridge, I absolutely agree with you, and we have said this on this series of the Daily Morning Market called Time Without Numbers. A similar scenario we are going to see on US 100 or the Nasdaq, which is mainly concerned with tech companies, and we see yesterday price almost printed with an indecision candle, but overall we're in a bearish trend. This is because of the trade tensions. Now we see what Rich is saying, and echoing that what we have been saying on this series. Investors are pulling out their money from stocks and group of stocks, and this is causing them to lack a momentum to be in demand, so then constant supply, so short positions will be likely much more considerable. On US oil, we see that we're still printing bearish, attempting to breaking down the area of interest that we had mentioned quite a number of weeks ago. Beautiful, if you go back to our series of this daily money market call, we had mentioned that this is going to be the likely scenario and we are going to be monitoring it as it develops. The bearish trajectory of oil is attributed to the fact that the intervention of the new administration of Donald Trump to lower the prices of oil so as to have Russia have less resources to proceed with the war in the Middle East. Now, of course, intervening using negotiation and diplomacy to stop the war will not work, especially with Vladimir Putin. So other measures have to be taken that will have a somewhat effect to have him reduce the effects of the same. Okay. With that in mind, this is going to be a pre-recorded YouTube video to mean that you can access this YouTube video at your own free time at HFM Kenya. Kindly don't forget to like, subscribe, and click on the notification button. On top of that, as a disclaimer, this by any chance is not financial advice. This is purely meant for educational purposes. It is important to do your due diligence and observe risk management. And until tomorrow, the same place, the same time, I see McLean is saying, could we look at Euro JPY? I'll make sure to do that in the next series. But as of today, see you tomorrow, the same place, the same time, to do things the same way that has proven consistently profitable. Until then, take care and God bless.